Welcome to ForexTV.com. It's Thursday, November 8th. I'm Remy Hoki for New York Forex Market Buzz. In New York afternoon trade, as of 1 p.m. Eastern Time, Euro dollar is at 146.83. Sterling dollar is at $2.1102, while dollar yen is trading at 112.48 with U.S. stocks trading down and the Dow down by 170 points. Earlier this morning, both the ECB and BOE left rates steady as expected. And in U.S. data, new jobless claims fell 13,000 on a seasonally adjusted basis, while the 4-week average rose 2,000. Joining us now is Brian Dolan, Chief Currency Strategist at Forex.com. Good afternoon, Brian.
Hi, good afternoon, Remy.
Thanks for joining us on this Thursday afternoon.
My pleasure.
Well, we have a lot to cover today following Bernanke's testimony in front of the Joint Economic Committee and after ECB President Trichet's comments. As the U.S. dollar continues to trade at decade lows against the other major currencies, U.S. equities are slipping while crude and gold are soaring. So for Forex traders out there, how should they be factoring this into their strategies?
Basically, what they need to be looking at is looking at the market in terms of risky assets, and basically those involve the stock markets, gold, oil, and then in terms of the currencies, the risky assets are the yen crosses primarily. Dollar yen is the primary mover there. So when the markets are relatively stable, the risky assets are going to get put back on, and you're going to see the yen crosses tend to strengthen. However, at the moment, the U.S. equity markets are in an extreme negative down wave, and this is putting a damper on risky assets in general. So as a result, we're seeing gold come off, we're seeing oil come off, we're seeing the yen crosses come off. But again, as we've seen in the very short term, we tend to get very significant bounce backs in most of those assets. So the overall trend is still one for a lower dollar, and there does not appear to be any change in that overall direction at the moment. It's really only a question now of how much lower and at what rate the dollar continues to decline.
Well, on that note, it is hard to call levels for euro dollar, but if you could give us your next level of resistance for the pair, and also with inflation concerns being mentioned by the ECB and BOE, what does this mean for the U.S. dollar against the high-yielding currencies?
Sure. If you take a look at the chart in euro dollar, you can see that it's in a pretty clearly defined up channel, and the top of that channel was touched earlier this week at the high at 147.30. That upper level of the channel is continuing to rise, and today it's at about 147.5. And overall, the uptrend or the trend is actually showing signs of reaching new levels of strength overall. So again, there's very little indication right now of any pullback or end to that trend. In terms of the inflation outlook, it's a little bit of background noise. Actually, it captures most of the media attention with regard to central bank discussions. But overall, the central banks, the U.S. and the Eurozone in general, are both constrained by weakening growth outlooks. Much more in evidence in the U.S., but it's going to be becoming more evident in the Eurozone and the U.K. As we finish out this year and early next year. And then, of course, the strength of the euro and the strength of the pound are not helping overall domestic demand and the export sectors there. So what we're looking at is sort of a continuation of the U.S. dollar weakness for at least probably the next 2 months, and then conceivably into further into the first quarter. But then ultimately, we're expecting to see rate cuts. I'm looking for a rate cut out of the Bank of England in either January or February, and then out of the ECB sometime toward the end of the first quarter. And this, again, is going to be primarily on the basis of slower growth and continued financial market dislocations.
Well, you briefly mentioned inflation, and speaking of which, energy and gold prices continue to soar to record highs. So let's move on to the commodity currencies of the Aussie, Kiwi, and the CAD. As we see the U.S. dollar hit record or decade lows against these commodity currencies, for traders that trade the commodity currencies against the dollar and the yen, what is your forecast?
In the very short term, it looks like we have reached a top in all of the commodity currencies, and this has coincided with oil failing just below $100 a barrel. And we have seen already expressions of concern from New Zealand about the strength of the New Zealand dollar. At this moment, we're starting to see concern from Canada. The Canadian Finance Minister Flaherty is saying that exactly that he's concerned by the strength of the Canadian dollar. And yesterday's price action generated some significant candlestick signals indicating that the bottom has been seen in the dollar Canada and the top has been seen in the Aussie dollar. So I would be looking to basically enter into shorts on those if the levels are seen again. And it's clearly the levels that the stop loss area is clearly the highs seen yesterday in the Aussie dollar and the lows seen in dollar Canada. So again, I think there's a much better prospect of a bottom top in the commodity currencies at the moment.
Okay, Brian, last but not least, tomorrow morning at 8:30 a.m. here in the U.S., international trade data will be released. With the dollar falling against the euro and the pound, this has boosted U.S. exports. But if you could briefly give us your expectations for tomorrow's data, including the consumer sentiment.
Certainly. Overall, the data has taken a back seat right now to what's happening in the overall dollar downtrend, and I would expect that to continue. So regardless of pretty much what the data has to say, I expect to see the dollar remain relatively soft. So for the trade deficit, the deficit is expected to deteriorate slightly, and that's another excuse. It's another net dollar negative, and that's another excuse to try the downside in the U.S. dollar. So I would not rule out a further test in on the upside in the euro and the pound. And then I'd also point out that there's a breakdown now between the dollar's direction against the commodity currencies and against the eurozone currencies. So the euro and the British pound are still showing no signs of any kind of a reversal, whereas the commodity currencies have shown that. And then, it's the preliminary Michigan confidence indicator. The expectation there is for a slight decline of about 1 point. Given recent equity market declines, overall uncertainty in the housing market, the risk is certainly for a larger than anticipated decline in sentiment, and that again will work to provide another reason to keep selling the dollar.
Okay, Brian, as always, thank you very much for your insight and analysis.
All right, thank you, Remy.
That wraps it up for your Forex Market Buzz with Brian Dolan, Chief Currency Strategist at Forex.com. I'm Remy Hoki. Join us later this afternoon for PM Exchange right here on ForexTV.com.